In this lesson, we're going to talk about management, specifically short-term management. So now that we finished the strategy lessons, we need to know how to actually manage longer-term positions, whether it's short-term, meaning you're holding a position for about a week or 2 weeks, to long-term, where you're going to hold a position from anywhere 2 weeks plus a month, 2 months, 3 months, maybe even a year, right? And then short-term aggressive. We're also going to cover that, which is more of a snappy kind of day trading management. But in this lesson, we're mainly going to focus on short-term management, meaning that short-term management is kind of well-rounded, a really good management approach to use if you're a day trader targeting that daily run for a little bit more profit, or even if you're a swing trader, but you still prefer to be a little bit more of a shorter-term swing trader where you target the daily run for a little bit more profit. Again, from a swing trading point of view, this would be a little bit more of an aggressive management point of view. From a day trading point of view, this is a very easy and not aggressive management. The reason why I say that is from a day trading point of view, we're already catching that daily run, which means we're stretching our targets a little bit farther, right? Hence why we need kind of a good management approach to use to actually exit positions when our targets are missed. That's why management is so important, because our targets are not always going to be hit, right? So if we notice that price action is churning around or slowing down and so on, we need to be able to take profit and exit the position at consistent times, right? So that's exactly what I'm going to show you here. And from a swing trading point of view, again, you can be kind of a shorter term swing trader where you're mainly focusing on catching that daily run and not a weekly run or not a monthly run kind of thing. So you're a little bit more short term. So you might want to utilize the short term management approach as well. So that's getting a little bit complex for this intro. So let me jump on the charts, show you exactly what I mean by that. And then in the next lesson, we're going to focus on the longer term approach, which is very similar, but a little bit different. So let's have a look. So with that said, I'm going to show you one example here, which is an IBO type of trade for a really good chunk of profit, about 6%, right? It was managed using the short-term management approach. The short-term management approach is very simple. You take the trade, right? But first, whenever you execute a trade, at the time of execution, you need to decide where you want to target that position and what kind of management approach you're going to be using. It's extremely important because you don't want to be making emotional decisions when the trade is already live, right? That's where it gets a little bit tricky, because when you don't have a plan, when you take that trade and you don't have a management plan, you don't know what are you going to do, then later in the moment, it becomes an emotional decision, right? So every single time when you execute a position, whether it's an IBO, a CBO, an ABO, you need to make a management plan. You need to pick a management plan and stick to it, right? So with that said, short-term management is mainly trailing that 1 hour 50 EMA. One of the main characteristics of a short-term management option is that we are trailing that 1 hour 50 EMA with our stop loss, and I'll show you exactly what I mean by that. But also know that we enter on a trend change, right? So a lot of times we enter our positions on a trend change. If it's an IBO, the trend change has already happened. If it's a CBO, the trend change has already happened as well, right? So we enter on a trend change. With an ABO, a little bit different, advanced breakout, the trend is just developing, but a very similar concept. So we enter on a trend change, we exit on a trend change as well, right? Very simple. Enter on a trend change, exit on a trend change. So let's have a look at the charts. I'm going to break down this position really quickly for everybody here. And this is a beautiful, beautiful higher time frame play. So it's an IBO on a lower time frames. You can see break and retest of the 1 hour 50 EMA and the trend line. But let's have a look at the higher time frames first. So if we look at the higher time frames, this is a setup that we looked at a few times during this masterclass already. It has beautiful resistance on this monthly time frame, just gorgeous resistance. And what we had here was a beautiful breakdown and a pullback to the monthly 50 EMA and that beautiful horizontal resistance level that's just above there with many extreme rejections, which is exactly what we want out of a support and resistance area. So that's gorgeous, right? And the trade was happening right at the highs, right off of that resistance level. Now we can obviously also toss MACD or Fibonacci retracement in here, right? So we're obviously rejecting that 0.32 Fibonacci area here on the monthly time frame. So this seems like a longer term monthly play, right? And whenever it's a longer term monthly play, you can see that we're catching that monthly bearish run. And now it's time to do multi-time frame analysis. So we need to confirm that with the lower time frame. So the next lower time frame from the monthly is the weekly. So what do we have on the weekly chart? Well, at the time of the entry, again, same kind of resistance area. I'm just going to toss that in here on the weekly chart, but that's the monthly resistance level, right? Same area. It's just tossed on the weekly chart. And you can see that as the monthly high test was kind of developing here at the highs, the weekly chart was giving us this double top, right? Off of the highs. And again, the trade happened right here, right off of the highs, going short. And then when you look at the daily time frame, same thing, right? So we have the same resistance area right there, right? And again, beautiful kind of bearish high test reversal, bearish MACD divergence, rejecting that resistance area. Now, what is this? This is kind of an advanced breakout on a higher time frames, right? So the monthly chart is obviously bearish. It's a beautiful bearish setup on a higher time frame, specifically the monthly chart, but it is an advanced breakout on a weekly and a daily, right? So this is an advanced breakout on a higher time frame. So we know that with advanced breakouts, we have some safe target options, right? One of the safest targets would be obviously the 4-hour 50 EMA. In this case, the middle time frame is the weekly chart. So if we're playing an advanced breakout on a higher time frame, a really good target is also the weekly 50 EMA, right? Roughly 1.35, 1.36 in this case. Another potential target is roughly the 20 EMA and the previous lows, which could be a very simple target right here. Now the trade happened right at the highs, right? So the trade happened right at the highs, playing this daily breakout. So you have to be a little bit more cautious here when you're taking this, because it is a breakout play. But again, we're catching a new trend that is developing. And because this is not just a pullback play, this isn't a very simple pullback play, there's much more happening on these higher time frames. Because of that, we can push these trades a little bit farther, because I mean, we're trading a brand new trend and a brand new run on a monthly time frame, right? But still, from a day trading point of view, you don't really want to hold positions for months. Even from a swing trading point of view, you might not want to hold positions for a month. A monthly chart like that, if you want to target this entire monthly run down to the lows, I mean, you're going to be holding these positions for years, maybe a year, maybe 2 years, maybe 3 years, right? So this could turn, a setup like that could turn into a longer term investment. That's why you really need to decide what kind of personality you are. Day trader, short-term day trader, swing trader, a long-term investor, right? I'm going to approach this from a day trader point of view. We're catching the run here on a higher time frames and the trend on a daily chart, a new trend that is developing. So this isn't just a quick in and out position, right? There's much more potential in this trade. So I would say one of the first major targets would be the 20 EMA and the previous daily lows. If you want to hold it farther, obviously this could then go to the weekly 50 EMA at 1.36 for quite a bit more profit. That's also the next support and resistance here on the daily time frame, right? But to hold a trade this long, a lot of times short-term management will not work. So short-term management is a little bit more snappier. So that said, that is the higher time frames. Beautiful setup all together. Let's have a look at the lower time frames here. So from a lower time frame point of view, the 4-hour chart, as that daily chart gave us that double top, the bearish high test reversal, the 4-hour chart broke down, right? So we were trending upwards and we broke that trend with momentum. That's about it. There's not much more on the higher time frames on the 4-hour chart when it comes to kind of like a lower high. It wasn't the greatest, but there was so much potential on a higher time frames that we can utilize a little bit of discretion. We still have confluence because in general, we broke that trend line, meaning that the trend has the strong bullish trend that we had here on a 4-hour chart is now over because we broke the trend line. Same thing on a 1-hour chart, right? You can see that we were riding this trend line really well within this bullish trend until we finally broke down, giving us kind of this breakdown and the pullback to retest this general 1 hour 50 EMA, and we just topped 0.3 to Fibonacci when we started to fall to the downside, giving us on a daily chart, on a 1 hour chart, a big bearish engulfing. And that is when we went short on a live 5-minute 50 EMA break, right? Typical stop loss, 55 pips, puts us above or just around 0.75 Fibonacci retracement. So typical stop loss on an IBO. And again, if this was a typical short-term IBO, it would have targeted the 4-hour 50 EMA for about 1% profit, right? But there's so much potential here on the higher time frames that we can push this trade a little bit farther, because again, it's an advanced breakout on a higher time frame. When an advanced breakout happens, that typically means that wave 5 has finished, wave 1 is beginning on that higher time frame. That means a new trend is developing. So there's much more potential than just a quick opportunity down to the 4-hour 50 EMA. Hence why the next target, the target that I put down here for 9% profit, was the previous daily low and that daily 20 EMA at 1.38. So if we go back, there we go, 1.38, the previous daily lows, right, and the weekly lows. So that's an easy target. That's one of the first easiest targets to hit. And this is how we manage this position with a short-term management approach. So if you follow along here on the 1 hour and the 5-minute chart, right, we can see that we have this red line that I put here, which is the stop loss, right? Let's say this is where our stop is. Follow me on the 1 hour chart for a second. As soon as we started to fall down, again, remember our entry is right here, right? So as soon as we started to accelerate to the downside and this 1 hour 50 EMA starts moving down, we need to soon lock in profit, right? So we need to take our stop loss and remove all risk, meaning that we take our stop loss and we move it to roughly the entry price. But when do we do that, right? I'll do it on a 5-minute chart too. So we take our stop loss and we move it to the entry price. But when is it right to do that? The right time to do that is when this 1 hour 50 EMA is still protecting us. The 1 hour 50 EMA in this case always needs to protect our stop loss every single time. We are going to trail the 1 hour 50 EMA. So whenever we move our stop loss, the 1 hour 50 EMA needs to move farther down or up, in this case down, so that we can move our stop loss down, right? So with that said, price action moved beautifully to the downside aggressively. And at this point, right, you can see that the 1 hour 50 EMA has moved farther down. So roughly at this point, we can already take our stop loss, remove all risk by moving our stop to just below our entry price, right? And in this case, check it out. Even if it pulls back to the 1 hour 50 EMA like it did in this case to retest it one more time, because it will, you know, when it's trending, it's typically gonna go and bounce off of the 1 hour 50 EMA or some kind of trend line or whatnot, right? We just don't want to get stopped out for no reason at the beginning stages of this trend, right? So we just move our stop loss to just still protect this. We still want to be nicely above this 1 hour 50 EMA, but again, we want to remove all risk. So we move our stop loss right at the beginning here to just below our entry price. And then check it out. It came back to retest this 1 hour 50 EMA and again started accelerating massively to the downside. So we take our stop loss again at this point, and we just start trailing it. At this point, this potential trend line is developing with 3 rejections. So we're mainly going to be trailing this trend line and the 1 hour 50 EMA, just like that. As price is moving down, right, we're just taking our stop loss and we're just moving it down with price action, right, just like that. Keeping it nicely above again, just in case it goes back to retest the 1 hour 50 EMA. We don't want to get stopped out because it makes a massive high test. Or if it comes back to retest the trend line, we don't want to get stopped out again if it makes a massive high test. So we want to keep it a good distance above, right? Just like that. And we always want to trail it. We want to trail it. We want to trail it. We want to trail it until finally it kind of breaks out to the upside, right? It breaks all levels and eventually hits our stop loss, right? That is short-term management. Short-term management is simply we're just following that trend on the 1 hour time frame, right? And following that 1 hour 50 EMA mainly. That is it. We're mainly just following that 1 hour 50 EMA with a lot of room to move so that if we get a big high test, we don't get stopped out for no reason, right? So we really want to get stopped out when we get a trend change. See this trend change on a 1 hour chart and this break to the upside. So that is one way of utilizing the short-term management approach. It's very simple, right? As long as the higher time frames tell us that there's a larger opportunity here, we might get an ABO on a higher time frame. We might get an IBO on a higher time frame, or we might get a CBO on a higher time frame. That means we're catching that daily run. It's not just a quick in and out position on a lower time frame. It means that there's more to it because a daily run is beginning or a higher time frame trend is beginning or whatnot, right? Whenever we have situations like that, we can take those day trades and push them further to catch more of that daily run. And this is short-term management approach. One thing that I mentioned at the beginning is enter on a trend change, like we did right here, breakdown, retest, trade short, right? Beautiful higher time frame, so we utilize a little bit more discretion because this wasn't perfection, but it was still a clear break and a clear retest, right? Of 1 hour 15.3 to Fibonacci. Enter on a trend change, exit on a trend change. So another option here is right here. You see how it broke the 1 hour 50 EMA on this initial break? There wasn't a trend change. We didn't have a double top. We didn't have a higher low, nothing like that. So there wasn't a trend change. But finally here, we kind of developed this double bottom, this kind of a wedge pattern, really, if you draw in a little wedge, right? So pretty much developed like a wedge pattern. And then we broke out to the upside. So we decelerated on a 1 hour chart. We developed bullish MACD divergence on this 1 hour time frame. And we broke the 1 hour 50 EMA to the upside. And we also broke this trend line, which was key with 1, 2, 3 rejections. And this was the fourth right here. We broke it to the upside. So sometimes when you're on the charts, right, we move our stop loss like this because we're not supposed to be on the charts 24/7, right? We travel, we work, we run businesses, we have a life, right, as traders as well. We're not going to be sitting here on the charts 24/7 managing these positions, right? So that's why we can utilize a stop loss and move that stop loss down as the position is developing, as the EMAs are moving downwards and so on. So that's short-term management. But also part of short-term management is that if you are on the charts at the time of this breakout, right here, as it broke the 1 hour 50 EMA, guess what? Enter on a trend change, exit on a trend change. So as it broke this 1 hour 50 EMA and the trend line, right? The trend line was even more important than the 1 hour 50 EMA here because it was a better resistance level. As soon as we get this breakout to the upside, take profit, right? And that is right there. Instead of waiting for the stop loss to be hit, we can exit as soon as we have a clear breakout after a trend change. And that was for 330 pips, 330 pips divided by 55 stop loss. That was 6% profit. A beautiful trade like that managed for 6% profit. And on a daily chart, that was right here. You know, so it was just above that 20 EMA, right? We could have let it ride all the way down to that 20 EMA on the daily chart or the weekly chart, I mean, on the 4 hour time frame, that would have been all the way down here, right? So we could have let it ride all the way to those lows, to those daily, weekly lows, and to that weekly 20 EMA. But again, sometimes those targets are not going to be hit. So we need a short-term management approach to exit the position, right? And this is it. Short-term management, you trail that 1 hour 50 EMA, you trail that stop loss above that 1 hour 50 EMA, like in this case, and then you exit either via your stop loss being hit when it breaks out if you're not on the charts, or if you are on the charts, you exit as soon as you get that breakout either off of the key trend line, right, or off of the 1 hour 50 EMA. As soon as the 1 hour 50 EMA breaks or a key trend line breaks, at that point you exit the position, just like in this case. So that is it for short-term management approach. It's a really good approach. It's the approach that I use majority of the time simply because I'm more of a shorter term trader. Even if it's a swing trade, I still prefer to use short-term management approach just because I like to take my profit and move on, right? That's a 6% trade, right? And it's beautiful. They happen once in a while simply when those higher time frames line up beautifully like that and we have those longer term opportunities, swing trades, really, right? And you can execute them as a day trader and manage it this way. And you can also execute them as a swing trader and manage it this way as well if you wish. So this is short-term management approach. That is it for this lesson. In the next lesson, I'll show you how you can manage positions with more of a longer term bias. See you there.